it's not realized until it's harvested. But otherwise what happens, and this kind of gets into going really far off the path here, accrual versus cash numbers, and that's an accrual adjustment. And at Farm Credit, we make those accrual adjustments because in farming, realistically, most adjustments need to be made for accrual reasons. Good? Yeah.
Your working capital, that's what you can borrow against, correct? If you need more cash to cover your expenses during the year, you could borrow against that, right?
So the question was, can you borrow against working capital? Some banks do loans based on your cash reserves, money kept in your bank account. As we're non-depository, we don't do that type of lending, but we do lend operating money. But we would use machinery, equipment, or real estate as our collateral, not your bank accounts.
And that's that.
That's going to be your assets and your machinery, equipment, and your land.
Okay, thank you.
So we could take, sorry about the pop-up that keeps happening, the land value of $300,000, and we could do both the long-term and the operating loan off of that same security. Good? Okay. So one of the other things that's in your packet gets into proposals for changes to the business. What we look at doing when we're looking at proposals and thinking about changes for the business is there's typically a problem that's been identified or an opportunity that you're looking to take advantage of. When we're going into that, we're going to describe the favorable outcome, the alternatives. So as we talked a little during the breakout session, we talked about sometimes we want to go out and buy new equipment, but it might not financially be in the cards for you. So what are the alternatives? And that's where that form will really help you kind of go through those ideas, identify resources and assistance needed. And the most important thing is making sure you're realistic in any of this proposals for changes. And the reason that I do this after the first two is once you have your income statement and your balance sheet, you may say, hey, I need to make some changes. So how do you do that? You start thinking through the process of making some of those changes. And you want to kind of give yourself timelines as you're going through it so that you can say, okay, it didn't happen this year. What can I do for going into next year to make that happen? Excuse me. So you're going to test the proposal on paper before implementing it. So for example, you may want to improve your net income. You may go over the project cost and returns resulting from an investment and calculate the effects on the net income. So the fourth handout that I gave you is partial budgeting. So what partial budgeting does that's a little different from the other is it's analyzing changes that affect only a portion of the business. So for example, well, we'll go into an example in 1 second, but we're only considering the income and expense accounts that change if the proposal is adopted. So partial budgeting procedure, you're going to outline the proposal in detail, describe the investment, determine the cost of the investment, and then describe what your anticipated result is going to be. We want to make sure that they're realistic. And this is something you'll hear me continue to say. A lot of times as a loan officer, we see a lot of proposals, and no proposal ever looks like people are not going to make a lot of money. That's not the reality of life, unfortunately. So being realistic, you're going to have, again, if you go in showing that you're going to lose $1 million, you're probably going to also have issues getting financing. but being realistic and that you've thought through some of the hurdles that you're going to have as a new business owner really makes people realize that you've put the work in and you realize that it's not going to just be super easy. So realistic assumptions, maybe increase sales by 5%, increase productivity by 5%, and this is on an existing business. Obviously, you may have a 50% increase in year 1 to 2 on a startup operation. But once you are at a size where you're a full-time operation, you know, a smaller, more realistic number is probably where you'll really see the change. And you want to make sure you take everything into account as you're doing it, all cost. The fuel to get down the neighbor's property to help farm that. So here's the proposal worksheet. As I said, it's in your handouts that you got. And then the partial budget form. So I'm going to go over a quick example for partial budgeting. So for a retail market with gross sales of $1 million, I know these are big numbers, but they're nice round numbers, so they work best. With a net worth of $500,000 with 50% net worth. So what that means is they have $1 million in assets and about $50,000 in debt, which would leave that $500,000 net worth and 50%. So business cash flow debt with minimal excess cash. So they're having, they want to have additional excesses, which is the money left over to expand the business and so forth. So their proposed change to get more money in this operation is to add 500 square feet of additional enclosed insulated greenhouse space. The cost is $100 per square foot, or $50,000. Again, we're trying to keep it easy and round. And then the reason in this example is to have more product and make sure that it's displayed better. So with anything, you have to make some assumptions. So these were the assumptions that we made in this example. This will increase sales by 5% minimum. There's going to have additional plants to sell. They're going to, because they have the additional space, they'll also need to grow more product. They're going to have a cost of money. It's probably a little lower today. It's a little older of a presentation, but cost of money at 6%, and an annual loan payment of $11,500. And that's with the assumption that it's 100% financing. Sorry. Historically, they have a 40% gross margin, and so the decision becomes whether or not it's worth doing this.
Can you define gross margin?
It's your expenses into your gross income.
I don't understand.
So, give me a second.
Could you repeat the question?
The question is about what is gross margin?
There was a question, is what is gross margin? So gross margin gets into your expenses here divided into your net income. So those two numbers divided into each other.
I guess you're asking if it's different between net farm income. Repeat my question too.
So the follow-up question was difference in net farm income versus gross margin. And it's a percent versus a number. So did you see here it's a percent. So one's divided, one's subtracted. Okay. So here's partial budgeting. so we said that the increase, and this would be essentially if you were filling out the form, what it would look like. So the increase in income would be $50,000, which was the 5% in sales. So the gain would be $50,000. So we then have to offset that by either reduced income or increased in costs. You have to figure out if that's going to affect that number. Sorry. So, no, that's a pop-up from the computer. I keep closing it. So, $30,000 in labor and production expenses is what we figured would be what would be needed to offset the additional space in greenhouse, with 60% variable expenses, and then $11,000 in fixed expenses, which means that this addition would cost them $41,500, giving a net profit for just this portion of the additional greenhouse space of $8,500. So the question says, is it worth doing? So for some people, it might be. And it really comes back to, is there maybe a better use of that money that it would cost you for that additional space? Is there something else that you could do to make additional income? And these are some questions that you have to really answer to yourself as you're going through the process. So in the same example, what we get into is if you can repay for under 2 years, you're in a great position. Under 3, it's a good idea to do it. So essentially what we did here is the investment cost, which is the $50,000. Yep, that needs to be slid over a little, but over return, net return / income. So you have the $8,500, which I showed you in the last slide, divided by the 50, which is 5.9 years. So to get to the 2 years mark, you have to have $26,500. So you want to then test your assumptions, and you can kind of explore other ways as to whether or not that'll help. Excuse me. So I know you guys have kind of gone through business plans, and I'm going to just kind of tie a lot of that stuff that we went over in depth into the business plan quickly for you. So, and tie it back to loans as well. So why should I create a business plan? So really what happens is you create this business plan and you're sharing your idea of how you're going to implement your business. And you could be in your first year, your second year of business, and it still might be a good idea for you to continue to update your business plan. As you go in for financing, whether through farm service agency, farm credit, they're going to want to know, who do you sell to? How much do you sell your product for? What do you own? What do you owe money on? Do you have to borrow, rent equipment to do the additional, whatever your business plan says? And that's really an opportunity for you to think through that process. So I'm going to kind of skip over because I know you guys did a lot of the basics in the business plan already, and just kind of really hit the financial part. I know that there's been some different conversations of different avenues. When we did Annie's project previously, this was the website that was used. It does a really, really good job. It goes through every screen with you, and it kind of talks you through it. And I just wanted to quickly show you a few examples of that. So it's pretty easy to get started on this. And you'll see down here at the bottom of the screen that it has tips. So as you're going through and filling it out, it gives you ideas of what you want to include in this section. And it goes through, as you can see on the side here, the executive summary, the business description, operations, marketing plan, management and organization, and then the financial plan. So as I said, this is kind of the area I'm going to focus a little bit more on, but it's a great tool that's out there and it's free. And as we were discussing during the break, you can send it and have somebody help you review it. And I'll let you talk about that later. This one specifically, the financial position, and it kind of goes over, this is where you want to discuss your balance sheet and things like that. I would still add that information into your business plan, but this is where you're going to describe. So maybe your net worth is low. This is maybe where you could describe and explain some things that you're doing to improve it and so forth. You'll see here there's also a resources tab, and it goes over a balance sheet template, so you don't have to use the one with the Farm Credit logo on it. There's one there, as well as net worth statement. And it goes over, like I said, this is a really, really good tool for you to kind of get through and overcome some of the challenges that, financial statements typically give people. And then this kind of gets into, for example, under samples of that they were looking to do an expansion and kind of getting into. So even if it's not that you're a startup business, but that you were looking to do an expansion to an existing business, the business plan would help identify some of those key areas of weakness that you might need to address. So again, as I said, be realistic when you're working on any budgets. Make sure that they're not saying that you're going to make $1 million in your first year. We all know that startup businesses have challenges, and you want to make sure you're addressing those challenges and how you're going to overcome them. You want to make sure you include all of your expenses. A lot of times people bring in business plans that miss a lot of important things, like land rent. How are you going to get the crop in the field? You have no equipment. So you want to make sure that you've thought through all the things that you're going to need to get going. And then the other part here is make sure that your yields and prices are realistic. So what you don't want to do is say that, you're getting $80 a box of tomatoes. It's not happening. And if you are, let me know where you're selling them. So it's just making sure you're realistic, and you can reach out to your local cooperative extension and to the USDA Ag Statistics to find out, your average yields for the county to make sure you're in line. So these are the things that you could include in your financial plan. If you have historic performance, but the projections, what you're going to look to accomplish when you start the business, and how you're going to get there. We went over this stuff earlier, but again, you're going to include your balance sheets, your net worth, and you want to make sure you're talking about your strengths and weaknesses financially as well. If you have an issue with your credit score, this is also where you'd want to address it. And make sure, the reality is if you're going for financing, people are going to be pulling your credit report. Know where it is before you go in and understand why it's where it is. There's a lot of different organizations that work with people who have issues with their credit scores. And I would make sure you know that number before you go in. Some of you are not going to have a trend for the last 3 to 5 years, but if you have it, make sure you include it. And that you have the ability to cover the debt that you're requesting. So you can quickly look at your own information that you have and see if whether or not you think it would get approved. Can you handle the additional debt based on your historic, or what changes are you making in order to do that? And if there's any major changes, make sure you mention that and point it out. Hey, I now going into next year, I have 20 extra acres I'm farming, 5 extra acres. So investors and lenders both want to see your projected cash flow, income statement, and balance sheet. So the two that we worked on during the session here, as well as a cash flow statement. What that's going to do is that's going to show whether or not you have the ability to cover all of your responsibilities month to month. Excuse me. So the other two items here are going to be your projected income statement and a pro forma balance sheet. That means next year, what does your income and expense look like compared to years past? And what do you think, once you add this debt, what's your net worth going to look like? So for example, I'm going to buy a piece of real estate that's $200,000, and I'm going to do a new loan for $100,000, and I'm going to use cash to make up the difference. Well, that could have an effect on your working capital because now you've pulled out $100,000 in cash. Briefly, you want to make sure you're going over how you're going to manage and acquire assets. As we all know, agriculture requires typically a lot of equipment and land, and so what's your plan to get that? Is it rent? Is it lease? Is it purchase? So those are some things. And if you have investments or retirement funds, if you're planning on using those or investing those into the business. Benchmarking, as I said, you can do that through the USDA as well as through ag statistics. Capital requirements, this is what do you need to operate? So if you're going to need money, how much and for what purpose? And making sure, again, that you can afford the debt schedule. Not sure how many years everybody's been in operating, but I wanted to offer just some ideas for startup financing options. I know that USDA was in here earlier. They have a great program for beginning farmers and ranchers. We at Farm Credit have an investment program called Farm Start. I'm going to pass out a flyer for that, and we'll make sure all the different locations get a copy of it. And then once you are able to either graduate from those or you have enough history, Farm Credit East is also an option. Here is my information, and I will open it up for questions. So one of the questions I got was, people earlier asked about record-keeping program. Can you briefly describe? We have a record-keeping program at Farm Credit East through our tax preparers, where they can either come out to the farm or you can bring your information into the office, and they can help you put that information into QuickBooks or Centerpoint. and generate those forms that we've kind of talked about so that you can have them monthly. They can do it as infrequent or frequent as you want.